Can you guys hear me now? Sorry, I got a new mic, so I've been testing it out. Let me know if you guys can hear me. All right, cool. Okay, sweet. So back to it. SPY, gap up, we're above the 10, 20, 50, and 100-day moving averages. You can see that we've been struggling so far at these lines that they've almost all converged. Usually when we do move, we move away from these lines. You typically obviously want to be away from them to the upside if you're bullish. But when the stock or the index that you're watching just starts moving sideways and they start converging, that's the worst because that means there's not a lot of movement. But look how far we are away from the 50-day moving average. This is the furthest away we've been in a while. So that's good news. That means the price that we're trading at right now is above the highest price, the average price of the last 50 days. We could easily see all-time highs on SPY considering that we regained the overnight uptrend last week. We needed to close above the previous day's highs. In real-time trading, we didn't, but notice in post-market on Friday, we climbed up to close above this day's highs, which puts us back in an overnight uptrend, and that keeps us in an overnight uptrend as long as we maintain a close above the previous day's low. So we need to close above 674. Technically, we can close anywhere above that level and still be in an overnight uptrend going into the rest of the week. And that sets us up to potentially retest that all-time high mark. Some big movers so far this morning are going to be Micron, Warner Brothers for obvious reasons. Anything that has to do with Netflix right now is really going higher. JHG, NEM, Iridium, and Coherent. So none of these really stand out. Maybe MasterStrategy, Coherent, Iridium. So let's see what's going on with Iridium. So this is a communication stock. It looks like it saw the strongest volume it's seen all year on Friday. So this could be... Let's see what's going on with them. Let's see if we can find anything. So I always, when I'm doing my research on these guys, I like to actually go to Thinkorswim to their live news feed, and I will literally look up the stock on their live news feed, and it gives me the latest news on the stock. So I don't see anything from today. It looks like it's been selected by Hyundai to provide IoT connectivity. So good news for the stock. Since they're going off this morning, let's go ahead and dive in a little bit deeper to see what's making them move. Iridium. So it looks like it's a commercial provider of communication services, connecting people. Okay, so satellites. So, okay, I think this is what's making them move. The satellites part. If you guys look at our watch list from this week, you guys will actually notice that in our watch list, I included a stock called Voyager, and that's important because right now space stocks are really starting to gain. And through my research over the weekend, I discovered that we are deorbiting, or not us, but NASA is deorbiting the ISS, which is the International Space Station, and that's going to be deorbited and brought down from space by 2030. It served as a pretty significant landmark in space because a lot of research was done on it. Now, instead of NASA controlling this, what they're doing is that they're actually handing the power over to private companies, which is something that America is classic for. The United States allows private companies, that's the beauty of private credit, to really take matters into their own hands. And so NASA is going to contract with these companies that can potentially replace the International Space Station with their own private stations. One of the companies in the running is going to be Voyager Technologies. This is the stock that we covered on the watch list for this week. It's not just limited to this week. Remember, you guys, we are a swing trading group. So when we take a look at a stock, we can look at it here and then trade it like weeks down the line when we find a better entry. But with that being said, Voyager is potential. The company is still young, but they've generated about $160 million in revenue. And they're not likely to generate anything from Starlab, which Starlab is supposed to replace the International Space Station if they do land that contract. But if they do finish that and they land more contracts, then this is going to be one of the running companies. But I include it with other companies like Rocket Lab, RDW. So all these space companies that are still high risk, high reward, they're definitely starting to move, and they might even continue moving higher, especially if we go into next year and closer to 2030. SpaceX going public is going to be a very big. You see how you know how Nvidia is to AMD and all these other semiconductors. You know how that there's like a relationship. So when Nvidia moves, all the other artificial intelligence stock move up with it. I think SpaceX is going to be that foundation for these space stocks. You know, you're going to have SpaceX go public at an $800 billion valuation. At least that's what they're projected to go public at. And with that going public, it's going to bring a lot of attention to anything that has to do with space related, taking passengers to space, taking cargo to space, building an international space station replacement. And so SpaceX going public next year is going to be a big deal for companies like Voyager and anything that has to do with space. We mentioned a few other names in our watch list. Boeing, we're already holding NOC, LMT or Lockheed Martin, RDW, which is a small high risk, high reward play, and Rocket Lab. These are just some related movers that are going to be inspired by SpaceX. So space, big theme for next year, you guys. I assume it's going to be one of the really popular themes to trade. What else did we have? So for those of you in our premium group, you guys have access to the full watch list. For those of you who are not in our premium group, you guys can join through our website. But here's another couple stocks that we mentioned in our public on our public website. We talked about Carnival going into this week. Carnival is a pretty fun trade. Right now, you guys could see that the stock held its second highest volume day in the last 12 months on Friday. Reason being is because Carnival is bringing back their dividend. So they stopped their dividend in 2020. Obviously, when the pandemic happened, you guys can look back and see that it was paying its dividend all the way up until this big crash. Guess what this was? This was COVID. When that happened, this company stopped paying its dividend. It discouraged its investors from buying. But you'll notice that Carnival, so look at its competitors. So if we go to NCLH, which is Norwegian Cruise, the stock is also struggling. But then there's also one more stock, RCL. This is the only cruise line that reinstated its dividend after cutting it in 2020. Notice it continued struggling, very similar to Carnival, all the way up until they brought back their dividend in 2024. At that point, the stock more than doubled, actually more than tripled, going into an all-time high of 366. So Carnival could very much be setting up for that same kind of rally, especially now that they've brought back their dividend. And it's a company that's actually doing well. So I'm not a big fan of investing in airlines because airlines are so volatile. So I typically would buy an index like Jets, because it's really hard to maintain profits on an airline. However, cruise lines are actually profitable and they maintain profitability, which is something that's really attractive. Carnival only trades at a price to earnings ratio of 14, a lot lower than its peers. And it has been profitable. It has been growing revenue, not substantially, but steadily. And most importantly, net income has been consistently positive. Balance sheet is strong. Free cash flow is gaining. All in all, Carnival is looking really promising for a continuation rally. What it did on Friday is something that we call a power earnings move. It moved 5% plus and maintained the highs. And so now we're looking for Carnival to break out above 32.80 for continuation. We have our entry already set for the premium members. But we might be joining this company and adding even more as soon as it breaks above 32.80, which is right around where we have our breakout resistance right now. Next stock that we covered that's available on our public website, and then everything else is private, is going to be Intuitive Surgical. So you guys will actually, those of you who are in our group, you guys will know that we added Intuitive Surgical to our watch list back in September. It never pulled back to our entry, but we added it in September to our watch list, and it looked something along these lines. It was here that we added it to our watch list, and we wanted entry around 415. The stock never gave us that pullback, and it reported earnings, and you can see that it has been nothing but to net since. So a beautiful gain from Intuitive Surgical. It is back on our watch list because this stock is likely going to be a winner in 2026. So let's see. Let's look up White House Robotics. Let's look this up. So the Genesis mission from the White House is very important to pay attention to for next year, you guys, because it really tells us that the White House is focusing on scientific discovery, technological innovation. We are in a AI race. We are in a global technology race, and many prominent figures agree that the United States needs to win the AI wars. It absolutely needs to win the AI wars because whoever controls AI is going to control the better defense of the world. So AI is not just about, a chat bot, you going to talk to it, potentially proposing to a chat bot. I mean, the latest news is that some lady is trying to marry ChatGPT or something. The AI race is about military. It's about war. It's about power. Trust me, it's not about the chatbots. The United States military is working tirelessly to have the most dominant AI, and it looks like it's probably going to continue that way for the years to come. With that being said, AI also spreads to other parts of the world, and the United States investing in AI, robotics, anything technology and automation is going to be good for companies in this space. Now, most robotics companies, for example, let's say Serve. Now, Serve is a company that puts robotics on the streets. So they're little robots that deliver food. This is a company that, is creating some revenue, but they're losing hundreds of millions of dollars every year trying to make their product work. And it's not really a super feasible product. But then when you have another robotics company like Intuitive Surgical that is established, that's making billions of dollars in revenue, and they're profitable, strong balance sheet, strong free cash flow, that is an automatic, hey, maybe we shouldn't always be looking at these small, high risk, high reward plays. Let's see if there are any robotics plays that are actually strong, that are actually creating revenue already, that are actually established in the field. Intuitive Surgical stands out as one of those companies. It is up 30% since we initiated coverage in September. It is a dominant player in robot-assisted surgery. It leverages cutting-edge technology that enable physicians to perform minimally invasive procedures with great precision and efficiency. So if you're getting surgery and you are this might be a machine that they use. They have a machine called the Da Vinci Surgical System. It's Intuitive Surgical's most prominent product. And its latest version arrived in 2025 with 10,000 times more computing power than its predecessor. So right now, when you hear about computing power, you're just hearing about NVIDIA, you're hearing about ChatGPT, you're hearing about the power of these large language models. But the beauty of this is that this is 10,000 more computing power in a surgical system created for the medical world, which is a huge market. It's a massive market. And the tech is getting popular. In Q1 2025, they delivered 147 of these systems. These are 147 very expensive systems. So don't let the number discourage you that they only delivered 147. And they're planning to expand its production across the globe. So this is a high quality robotics company that is already creating revenue, that already has a name for itself in the medical field. One of the best choices that we have going into next year. The company is trading at a high price to earnings ratio. This will come down as they increase revenue and net income. But I think that markets are still willing to pay that much right now for a company like this because they see such a strong future. So this is a strong contender. We will likely be entering this today, if not right now. I'm going to actually, if you are in the main group, I'm going to go ahead and send a setup on this and potentially enter a few more call options in the coming weeks because I'm really a big fan of the market into going into next year. I feel like we're gonna get a pretty big rally. So I'm gonna just type up my setup here. Those of you watching, I'm getting used to this. I'm not really used to being on live, and I'm trying my best to keep this as engaging as possible. If you guys have any suggestions, if you guys have any questions, please let me know. If the sound is terrible or if the screen is blurred or if there's anything, just let me know. I'm super up for a chat. I can't keep talking for 2 hours straight, so I would love to interact with you guys. And if you guys have questions, just bring them up. All right, let's see if my scanner is picking up any big movers. HYMC, this is a gold stock. Velo, okay, so this is a company that works with Anduril and they also work with SpaceX. So they're providing SpaceX with parts to their latest engine, and they work with Anduril. They just announced them as a customer. So they were moving last week. We actually brought them up in the group chat, and it looks like they're gaining again today. So this is possibly a winner, especially if it can get above 1505. So we're going to go ahead and place a resistance breakout here at 1505. If it breaks above, the stock's price target is going to be close to $18 to $20. Let's see what this stock's short float looks like. Short float is sitting at 13%, which sets this up to be a possible short squeeze player. There's only 8 million shares available to the public market. You know what that tells us about Velo? Is that Velo is a top contender for a short squeeze. So if there's only 8 million shares, let's compare that to a company like, I don't know, Fuel Cell. Fuel Cell has 47 million shares, and it already moves a lot if it sees a little bit of volume. 8 million shares is literally nothing, you guys. There's 3 million volume right now on the stock, and it's barely 22 minutes into the open. And 13% of the total 8 million shares available are being shorted, which means they're being bet against. And the only way to close out of a short is by buying back the stock. And so this, if it breaks above 1505, super strong contender for a short squeeze. In fact, if you're watching in our group, I'm gonna go ahead and write that in. Velo added to watch list for continuation. The stock is working with SpaceX and Anduril. I hope I spelled that right. Anduril. Nope. 1L. With Anduril. High risk, but technicals point to a possible short squeeze with 8 million shares float and 13.25% short float percentage. That is a nice short squeeze. Looking for a breakout above 1505 for a blast off 218 220. Now beautiful, huh? Okay, perfect. So Velo added to watch list. This is directly from my favorite watch list, you guys. This is pretty much the only one of the only scanners that I use, and it finds me all my stocks. Velo 3D printing, super popular. That might be a big winner next year, you guys. By the way, 3D printing, another company that we covered in the 3D printing space is going to be, gosh, what was that company called? Let's see, 3D XMTR. So first time we covered this was around 25, you guys. So 3D printing. Remember, when we see a strong stock on this list, when we see a big, like for example, we see that Rocket Lab is gaining, and we know that that's in aerospace and defense. So when we see that aerospace and defense stock is moving up, we look at other stocks in that industry. So we see that Velo is pushing, and it's a 3D printing stock. So we automatically look back in our watch list to other 3D printing stocks that we've covered, and XMTR or Xometry happens to be one of them. And this stock is up more than double since we covered it back in May of this year. So, and you can see that it's starting to gain again, along with the other 3D printing stocks. So that tells us there's a little bit of strength in this space, okay? So Velo's already added to watch list. XMTR might be another one. Let's put XMTR and Velo for 3D printing stocks. So that do you like the sound of that, you guys? It's coming together so far. Let me go ahead and post us. That way we can get more people on our All right, sorry about that. Okay, we have 6 people on. This is awesome, you guys. This is more than we had last week, so this is pretty great. All right, next stocks. So we have big movers so far this morning. We have a full page of these movers. It looks like BE, another big mover. This is an energy name. Iron, also an energy name. So both BE and Iron are kind of in the same realm right now. PL, Planet Labs, Rocket Lab, RDW, these are all moving because of the same reason. CSIQ, that's a solar company. CDE, HL, HYMC, these are all mining companies. So big moving, or let's see, industry highlights. 3D printing, gold, precious metals, mining. Those are big movers right now. Space, aerospace stocks, and yeah, and then yeah, that's it. So these are some industry highlights. It's still super early in the day, and it's also early in the week. And so what we want to do right now is we want to highlight the industries that are moving higher, and then by end of day, if these industries are still moving higher and they're holding those highs, we're going to look at the stocks that are the strongest within them, and those are the stocks that we're going to be trying to take on as a swing trade. And then we're also moving crypto related stocks are also moving. So that's what we have so far. We're going to keep coming back to this over the next 2 hours, this scanner, and we're going to refresh our page. That way we see if more pages come up. So already since we started, we only had 1 page. Now we have 2 pages, and we can go through this and figure out what else is moving. But first, I'm going to go ahead and check on my positions, because I'm seeing that our group is telling us that HUT is moving higher, and HUT is one of our positions. So let me go check on HUT to see how it's doing. Wow, massive breakout from HUT. Wow, what an amazing move. Let's see how we're doing on this. Yep, we're up 10% right now on that HUT trade. Our price target on HUT is going to be 51. So I'm going to go ahead and trim HUT here, taking profits on half my position, on half my HUT position here at 49.67, nearly at first price target. Okay, so I'm gonna go ahead and close. Boom. Isn't that beautiful? That's a good trade. And that's a 10% gain, I believe. Yep. Plus 10.7%. That is nice. Cool. All right, so let's check on iron. So iron is a big mover this morning, and what we do know about iron is that it was a very, very popular stock earlier this year. Let's see if there's anything in specific. Oh, actually, Velo breaking out. You guys can see Velo breaking out. Wow, massive move. Remember, you guys, we just talked about this here in this chat. We talked about it. It says higher risk with the technicals pointing to a short squeeze. There's only 8 million shares available, 13.25% short float percentage, and we're looking for a breakout above 1505 for a continuation to 1820 on Velo. So this could be a winner. So let's see, Velo breaking that 1505 mark. So we'll go back to iron in just a second. Let me go ahead and answer this question for our member. He's asking about EQT. So let me look up EQT to see what's going on. So EQT looks to be below its support. Okay, let's see. Okay, so back to Iron. Um, Iron was a super strong player. If you guys don't know about Iron, here's the company's breakdown. This is a data processing data center, powers the future of Bitcoin, AI, and renewable energy. So this is pretty much a renewable energy play. Financials, in terms of financials, Iron, I believe, is briefly making some revenue, but that revenue is increasing very strongly, which is what's making it so attractive. You guys could see that revenue in 2025 went up 230% Q4, 170% Q3, 170% Q2. And with that, they actually posted positive net income. So being involved in AI, being involved in renewable energy, just set them up so perfectly for a rally. And if you guys are not familiar with Iron, we actually wrote up a full analysis on Iron, and guess when we covered it? We covered Iron at $13 in November 2024. That, I mean, that gain, that's a 700% gain since we first initiated coverage. And at that time, we pointed out that the company has a dual force in two high growth sectors in data centers and renewable energy. And so, with that being said, the company was emerging as a very strong early winner in the space. And yes, it was. It was indeed. The stock rallied to gain more than 700% since. Now, since then, we had a big drawdown in AI. Remember, Oracle pretty much ruined things for the AI world. Not that Oracle is a bad stock, but their valuation just became too hot for their own good. You can see that Oracle is not making a lot of positive free cash flow. They're spending all their money. They're taking on debt. They're negative $13 billion in FCF. And so Oracle brought up some valuation concerns in recent weeks, and rightfully so. You know, you can see that the stock started correcting because they were taking on so much debt, and investors were starting to get uncomfortable. And you can see the sell-off happened, and with that sell-off, everything that's AI related also sold off right around the same amount, even the good names, a good name potentially like Iron. So if you're looking for Iron now and you're looking for a potential trade, the stock is back up. It's coming back up, but it's still right around the 100, the 10, the 20, the 50-day moving average. Remember what we said in the beginning of this video, you guys. If the moving averages are all starting to kind of move close to one another, that means there's a lot of disagreement in price, and the price is staying exactly where, like almost sideways. So we don't have a lot of movement above or below a moving average. And so your job right now as a trader is watch that 50-day moving average. That's the most significant moving average to the upside. You can see the stock has been rejected at it once, twice, three times. And so maybe the fourth time is the charm. Maybe Iron will move back above the 50-day moving average. You can use that as a support point and it will continue rising higher. Is it going to go back to that record high? That's really tough, you know, because it's not a company that has a strong history of generating revenue. It seems to be kind of new to this revenue world. And so the question for 2026 is the growth sustainable? Will they continue operating efficiently, or will they, like most young companies, swing back into losses, lose momentum, and maybe not land new contracts? So Iron, still a lot of work to do. I wouldn't call this a safe investment by any means. But it is a very high beta stocks that's subject to be a big mover on any movement with AI as a whole. Let's go back to this. Sorry guys, I'm gonna check on our setups real quick. Let me move this and make it this. Okay, perfect. So we have Medline. We're in Medline. It's moving higher today. I'm thinking of closing this, but I don't know. It's just that trading a IPO so early and young just always makes me feel so uncomfortable. Maybe I'll take profits. Yep, I just took profits. Medline closed fully here at 43 for a 12.68% gain. Still might be a long-term winner for those interested, but I'm closing for now because I'd like to see 1 to 3 earnings from the company after it won. Public to consider a longer term position may re-enter for a trade if it falls up to 3 below 30s. Okay, 12.7% gain on Medline. Pretty solid if you ask me. Hut is, I believe, almost at our first price target. So first price target on Hut is going to be 51. Cool. Hey guys, you guys give me 1 second. I'm gonna go ahead and open my blinds. It was so dark this morning in California. It's been so dark in the mornings. I don't know if you guys are on the West Coast or the East Coast, but waking up at 5:30 in the morning when it's so dark is just ridiculous. I wish the sun would rise sooner. Vin. So let's see what else is happening so far. See if any. Wow, okay, so we have 3 pages right now of these stocks. These are the top gainers so far today. 3 pages. That's beautiful. So it's still early in the day, so I don't trust anything this early on Monday or in the day. But already seeing movement in these industries that were higher risk that weren't moving before. You have um, quantum computing is moving. We're gonna add that. So the idea here is we're gonna circle back to these industries by end of day to see if they hold these highs, because if they do, they could potentially be the winners into the next week or two. Especially the fact that the market has been waiting for a breakout like this. So this is super awesome to see. AAOI, that's gonna be a big winner. AAOI added to watch list. Watch list. What are you guys feeling this morning? What should we do? Piano music? Should we do... Vin, are you on the live? I'm answering your question in the group. Ooh, platinum. That might be a good one. Everybody's looking at gold and silver, but platinum's also has been going up in price. Okay, it's a zero revenue company. I don't like trading zero revenue companies for some reason. It just doesn't do right by me. Fiserv. What is that stock? It sounds familiar. Oh yeah, okay. FI, right? Is it FI? Oh, FISV. There we go. Okay. So big drop on this company. Let's see. Let's look at the daily. Let me move myself out of the way here. Oh, what's going on here? Fiserv. Big drop last year. The company is way below its 2025 highs. Wow, what a drawdown from 238 to 68. Another good reason to it's a reminder to why you don't want to have all your eggs in one basket. What does Fiserv do? It's a financial services company, merchant and financial segments, offers commerce enabling products and services, including merchant acquiring and digital commerce and mobile payment services, security, fraud protection, stored value, pay by bank solutions. Okay, it's a financial company, but okay, what we already know about the financial market right now is that the Trump administration is really easing regulations on banks or any financial institutions. That might be good for a company like Fiserv, but just because it's good for the industry, it doesn't mean that it benefits every company if there's a specific catalyst that's driving a company down. So let's figure out why Fiserv is falling. Let's look at, first of all, their financial performance. It could be a big indicator for why they fell. Maybe flat revenue is hurting them. Maybe. We don't know yet. We're going to do a little more research, but so far it looks like revenue has been trending down in terms of growth. Look at this. They went from 7% to 6% to 5%. They had a standout 8% and then back to flat. Gross profit saw its first fall in more than 6 quarters, negative 3.34%. Operating income looks like fell. Pre-tax income fell. Net income was still positive growth. Okay, where's the problem? No problem so far. Just a little bit of weakness in revenue and income. Looks like their balance sheet is decent. It did come down. It looks like their balance sheet fell a little bit. So their positive assets fell, not too much, but still fell. Free cash flow is still positive. Nothing that stands out to be too bad. Let's go ahead and look up the company and see if there's anything that's making it fall. So Let's see if there's anything that's specific to Fiserv that's moving it lower. Ah, I see. Okay, so it looks like the company. My God, so many ads on this website. There we go. So the company reported just 1% organic revenue growth in the third quarter. Remember what we just said? We said that the company's flat revenue may be the reason why they took such a big fall. So only 1% revenue growth compared to 8, 5, 7% per quarter. So that's a pretty substantial fall. And the biggest drop happened because they adjusted their earnings forecast to just 850 to 860 per share. That's significantly lower than what they were projected to post. There is nothing more than investors hating. They don't hate anything as much as somebody saying we're lowering our guidance. Lowering guidance is almost like guaranteed to make a company sell off. Just like that, though, on the reverse side, a company increasing its guidance, especially if it's a company that's been selling off, that can literally make companies rally for weeks and months. Fiserv lowered their guidance on these earnings, and you can see that after they did that, that's when the company saw a substantial fall, 50% fall, because they lowered their guidance. Because lowering guidance makes them more expensive, and so the company, so the stock market reacted. However, it could be overreacting, but if you're not an investor in Fiserv, this is not a company that really jumps out at me for an investment. But if you're looking at Fiserv just for a short-term trade, I would say you're better off kind of looking at a company that already has momentum instead of one that's still kind of just stagnant. But if you're dying for a trade on Fiserv, if you just can't help yourself and you're looking for a trade, then perhaps consider trading it this way. I mean, it's a really tough trade. You can see a potential cup and handle here. The company is holding that 67 mark. It has a resistance around that 70 mark. This dates back to this rejection, and if it breaks out, maybe a move to 73.70. But any upside move on Fiserv right now, I would call it more of a dead cat bounce than it's going to be a steady overnight safe hold. So maybe a short-term trade, but I'm not in love with it yet. I think it's going to take maybe 2 to 6 more earning reports from them, so pretty long time before they can earn the market trust again, because they don't have the sentiment right now, and they also don't have the numbers. Cutting your guidance is pretty significant. Unless something happens and they raise guidance again and they surprise markets, I think this will continue being a hard to trade stock that's trading more on the bottom side than it is on the upside. I hope that helps. We went in there and really broke the stock down. I hope that helps for the person who asked the question, PZ5983. Who is that anyways? Just curious. Are you in our group? NBIS moving higher. Remember, this is a company that offers the infrastructure for AI. Very popular company. Very similar to Iron's chart. You see that? We just talked about Iron. And these companies, because they're AI related and because they're high beta stocks, they're moving exactly the same way. So Iron and NBIS and maybe CoreWeave is probably going to be CoreWeave. Yep, right around that 50-day moving average. A little bit of a different chart just because it IPO'd this year, but you'll notice they're all kind of right around that same spot. All these high risk stocks. Joby moving higher today. Maybe we can add that to our potentials. What is this? EVTL stocks like Joby and ACHR. Here we go. So pretty good looking. PZ, yeah, thanks for hopping on the live, man. Hopefully you get in our group at some point. Would love to have you in. Let's see. Let's see what else our scanner is picking up. So SMR, this is a nuclear company. Remember small modular nuclear reactors? That's a pretty big play. That was a pretty big play in 2025. Doesn't mean it's going to be a big play in 2026, but it's certainly an industry to keep an eye on because the Trump administration is fast tracking the ability for these companies to build small nuclear reactors. That way they can power AI. But the only drawdown of that, you guys, is remember other companies like NVIDIA and Arista Networks and all these companies that are powering infrastructure for AI, they're all working on making chips and data centers more efficient. So you see how that in the long run. So energy companies right now are seeing a big boost, but if these companies on the flip side start making these chips a lot more efficient, then they're going to need a lot less energy. So the nuclear trade and the energy trade may not hold up as long and as well as we think it will over the coming years. So I would be very wary of looking at these companies long term. The short term, they will benefit, but as soon as companies like NVIDIA and the data center operators figure out efficiency, I think it's really going to change the game, and we're going to see money going into other parts of the market that make it more efficient rather than energy intensive. Some of that part actually is, I believe, companies that supply lasers and let's see, let me look at this. I believe they're one of the companies that does it. Yeah, there we go. Optoelectronic components and lasers. So the whole idea of these materials is that they speed up efficiency, and so maybe these companies might be better winners for 2026 rather than the nuclear companies, because these are the companies that supply the components that make data centers and everything that goes in them more efficient. Coherent is one of those companies. We actually covered this stock in our group not long ago. So let's see, Coherent entry. Yeah, we covered it in August around 78 to 82, and you can actually see it's at 191 right now. So in a matter of 5 months, this company has gained more than 100% since we covered it, blowing past our price targets. And at the center of this change, this is what we pointed out. The artificial intelligence is creating the way data centers are built. It's recreating the way data centers are built. The infrastructure required to run high performance GPUs like NVIDIA's now demands more than traditional copper connectors. So remember, traditional is copper, that's what carries electricity, but to keep up with these trillions of calculations between moving servers and these systems are advanced photonics. They produce next-gen optical modules that allow thousands of GPUs to communicate seamlessly inside AI data centers. And so photonics, you guys, could be a big winner into 2026. Yes, Coherent has already moved up, but as data centers are continuing to be built, there are other companies in the space that we can look at. These systems, photonics, they move data at the speed of light. The speed with light instead of electricity. So rather than copper with electricity, these guys move it much faster, more efficiently, which will require less energy. And energy use and latency, this allows data centers to scale more efficiently. So like we said, more efficiently. That's what's going to really be a big theme for data centers, is all about efficiency. Okay. Cool. Sweet. So let's back to it, huh? Okay, so I almost put this stock on our watch list. Again, we're talking about photonics and we're talking about efficiency. So let's go back to Wi-Fi. This is a fairly new IPO. I'm actually gonna put this on watch right here. Wi-Fi. Did to watch this. So, company makes a little bit of revenue. It's inconsistent, losing money. So not a lot there, not a lot of fundamental backing, and free cash flow is way negative. So they're still early in the stage, but what I do like about it is that the company has 75% closely held shares. Now that is not super unusual for a young company, but it still tells us a lot. It tells us that one, insiders, they haven't sold their shares yet. Because it's a brand new IPO, a lot of insiders are still holding their shares after going public. And so over the next few months or years, we'll see these insiders start shedding shares and that internal amount starts to come down significantly. Maybe what insiders are waiting for is for the company to actually have a breakout. Because the company had a pretty decent rally and then sold off, they didn't take a lot of profits. Look at CoreWeave, for example. This is a company that went public earlier this year. On this massive run, the company's insiders were taking profits consistently. So you can actually see that CoreWeave's insiders have been busy selling. Since the company went public, they were all selling at $135 per share, at $75 per share, at $125 per share. So this was during its run up. They were busy selling, and as it came down, they were also busy selling, unloading their internal holdings amounts. So now CoreWeave has about 17% closely held shares, which is likely going to be the case with Wi-Fi in a few years. But I think Wi-Fi's investors are really waiting for a big pop for them to capture some profits and get off the stock. But since they're waiting for that big pop, and since there's so many insiders holding, this could potentially be a big mover on just any positive catalyst, because there's not a lot of shares available to the public market. And it just goes back to basic demand and supply and demand. If there's not a lot of supply and demand starts to boost on this company, we may see a big upside move. So Wi-Fi is going to be a big watch for us to potentially play a high risk, high reward type play on it. And it fits right in that industry of offering more efficiency to data centers, HPC infrastructure, cloud and data center solutions. So same kind of realm as Coherent that we just talked about. Let's see what's happening with Lunar. Somebody in the group chat just mentioned it. Yup, that's a beautiful move on Lunar. You can see that it broke out of this almost 12-month base on Lunar. And after it broke out, it had a perfect retest at 1450. 1450 was this resistant. It had a perfect retest this morning and continued bouncing. I don't see much resistance till actually about 17 to 18. So this may keep going. A good way to trade. Oh, now that we zoomed in a little bit closer, there is a resistance coming up around 1652. That's from post-market on Friday. So that's going to be the breakout point. If it can break above that level, 17 to 18 would be the price target. Maybe a good way to play this would be just being on the 5-minute candle. You can use that 10-day moving average as support guidance if you're just looking for a day trade on it. Let's see. We actually took profits on Lunar last week. Did you hold? Would have been nice to hold, but I closed on my end. I took profits. Props if you held. It's a really good move. PL RDW Voyage. Sold early. Yeah, sold early on my end too. This is a stock, like I said, that we covered on our watch list, Voyager. I'm really interested in this because they're one of the leading possibilities for the International Space Station replacement. So I'm going to take a very small position. I'm going to send it to the group. For those of you in the group, I'm going to send my official play on Voyager to the alerts channel. I already sent an analysis in the watch list channel, but I'm going to send an official alert. Alright, I'm in Voyager. I just sent a setup, you guys. I'm going to go ahead and enter my shares on my end. Yeah, thanks, Tayo. Appreciate it. Hopefully you guys are enjoying this live stream. Like I said, I can't. I'm trying my best to keep it engaging. we're not day traders per se. We're more of swing traders, so we're not like looking for high action and like zero DTE type trades. We'll take them. We'll take them here and there. I think that they'll be fun, especially if we see a pretty obvious trade. But we're just focused on analysis. We're looking at research analysis. We're taking a different approach to the market. A lot of these traders, they're just focused on day trades. They're focused on levels, but we're trying to kind of understand the fundamentals behind the moves and stuff like that. Appreciate you guys hopping on. That's a pretty big move on ADEA, software application firm. ADEA, let's look it up. Let's see what's going on with them. ADEA. Invention, development of innovation for entertainment, media, consumer electronics, semiconductor industries. This is probably the reason it's moving right here. 20 price to earnings ratio. That tells me this is a profitable company, and they're only trading at a market cap of 1.8 billion. Super low volume, not a lot of growth in volume, and then net income is not that eventful, but they're still profitable, which is not bad. 413 million on positive equity, 200 million. Honestly, super well-ran company. Like, if I have to say, if you're making that little revenue as a public company, yet you're still profitable, you have a strong balance sheet, and you have positive net income, that means you know how to run a company with only 150 employees. So already I'm liking what I see, but considering revenue is so low, I would still be a little skeptical of calling it a super safe buy and hold stock. But on the charts, we can actually see that this company is having a day. It's really blasting off. They're coming back significantly from that drop. Let's see if there's any catalyst that's moving them. Set for best day of... Oh, wow. They landed a Disney deal. Intellectual property licensing firm, Adia Rise co-signs long-term agreement with Disney for access to its media IP portfolio. Deal resolves all outstanding litigation between the companies. And they also raised their financial outlook for 2025. This is all great news. Like I said, it makes such too little revenue for me to call it a great pick, but I'm going to say that this is a very high probability swing trade because of multiple positive catalysts that's driving it higher. Best day for 3 years in the stock, I would look for ADEA for continuation. I'm going to go ahead and put this on our watch list right here. So I'm going to say ADEA, Disney deal, increased guidance. All right, back to it. Let's see what else is gaining this morning. UMAC, Unusual Machines. This is a pretty popular stock. What do they do again? I think it's like robotics, drone solutions. Drones, huge industry, you guys. Drones are gonna be. Remember, the White House and the Department of War, not the Department of Defense anymore, is really pushing for drones. That's part of the reason a company like, let's see, a company like Aero something, AeroVironment. This company launched last year. This is a drone company, and you can see that it went up 400% from its lows last year before correcting. But drones are still hot, so in 2026, drones could be still a pretty big play. One of those companies that are involved in drones, UMAC, Unusual Machines, could be a drones play. Let's put it on here. Remember, what we're doing right now is we're creating our watch lists for the week, and so that we can keep circling back to these stocks. Drone plays. UMAC in specific, let's see its technicals, and then we'll talk about its fundamentals. 15% short float. So out of the 34 million shares available to the public market for this company, 15% of them are being shorted, you guys. So what does that tell us? That sets us up for a potential short squeeze on the stock. Volume is a little below average volume, but it's still super early in the day. UMAC, let's see what its fundamentals look like. 430 million market cap. This is a company that's not generating revenue. It's development stage. So this is more of a project-based and overall catalyst-based company right now. So we're looking for them to land contracts, to build a backlog, to develop a minimum viable product, maybe start having some tests on those products. But for now, super high risk. It's going to move with the industry as a whole. And it's going to be more catalyst based than it is a fundamental based. So I don't trust it. I'm going to actually just take it off my watch list. I'm going to keep AVAV on there, and maybe I'll look for other drone related companies. That way I can maybe play those. We just got into Voyager. I sent the setup to the watch list, to the group, for those of you in the premium group. Watching a few other names for potential entry. But I don't want to take too many things on. It's still early on a Monday. I think we want to kind of wait to see if the market holds this push, what industries and sectors survive by end of day, because a lot of things are pushing, but it doesn't mean they're all going to hold up by end of day. So let's just be a little patient right now. Avoiding any careless entries, and just trying to see what stays strong throughout the end of day. That way we can see what is likely to move in the coming weeks. So I'm going to keep this on, and I'm going to go make a shake. You guys are going to watch me in the background. If you guys want to stay on, go ahead. I'll be back in about 5 minutes, not too long. Brennan, I would make you a smoothie, man. I'm known to make the best smoothies. Hyper Shakes. What do you guys think? Should we rebrand Hyper Shakes? It's just a good breakfast, you know. It's not heavy. It keeps your energy going. It's healthy. I hate eggs. I think that's what most people eat for breakfast. Let's see what's happening with SPY. We're making lower lows, lower highs since the big candle here. Lower highs and lower lows. So we need to get above that 684 mark. Brennan, that's a good question, man. So I don't know if you tuned in the beginning, but let's see the market this week. So on Friday, something significant happened on SPYs. SPY was stuck in an overnight downtrend, but on Friday in post market, it regained the overnight uptrend. So it closed above the previous day's highs and continued moving. So we're actually in a bullish overnight uptrend going into this week, which is super promising. It's a good sign. So I do believe that we're probably set up to probably hold that 10 and 20 day moving average. I'm not so confident that we'll continue pushing, but I'm kind of confident that bulls are going to hold the line. At least I don't see enough volume really moving the market much higher or lower this week. If we do push, if we do break above this mark right here, which is 686, more than likely we're going to see a new record high this week. But I don't know. I think we're going to move sideways. I think we're going to stay right around this range. And I do believe the market closes early on Wednesday and is fully closed on Thursday. Let me double check for you. Let me double check. So the market will be, yes, closed early on Wednesday, closed on Thursday. We closed early at 1 p.m. Eastern on Wednesday, and then normal trading hours on Friday. Hopefully that helps. Yeah, but SPY is still strong. You know, we have a good chance, but I think 686 is going to be the breakout point that we need in order for us to really see that big move higher, or else I think we're going to just continue moving sideways. Good looking stocks this morning though. We have a lot of movers. I mean, we have 3 pages of top gainers from our scanner. So a lot of stocks to look at and to add to our watch lists. QBTS, this is a pretty big quantum stock, you guys. I don't know if you remember, but quantum was a big player this year already, and it's still a big player. Quantum technologies is almost as big as AI in terms of the back end. It's just not as popular or consumer facing. So a lot of people don't recognize the opportunity. So I would say quantum is a pretty good sector to keep an eye out for next year again. So what we do know about quantum stocks is that they're super high risk. They're literally losing. I mean, like, look at QBTS. It lost, this is D-Wave Quantum. Net income over the last 2 quarters, they've lost more than $200 million or nearly $200 million. Um, So I don't know, you guys. It's just uncomfortable holding a stock like this, but it's one of those like bets. You know, it's a high risk, high reward bet, hoping that D Wave Quantum actually creates a product that plays a big role in quantum computing. It could be any of these stocks. It could be D Wave Quantum. It could be Ionic. It could be RGTI, which is Rigetti. So any of these could be winners. But the beauty of them is that when there is a positive catalyst for quantum, they all tend to move together. For example, you see that RGTI is up 12% today, and QBTS is also up a significant amount today. So when that happens, I want to know what's driving these stocks. What's moving these stocks higher? So it looks like, oh, there it is. So this morning at 4 a.m., an update. D-Wave is bringing commercial quantum computing to CES 2026. That's the electronics show, and it's showcasing its technology in Las Vegas. 2-day event at the Fontainebleau in Las Vegas for entrepreneurs, investors. So that means they're ready to showcase some kind of technology. So yes, the company does not make any money yet, but the fact that they're ready to showcase technology is going to drive investor sentiment. It's going to make people believe in the company, and it can also act as a catalyst for all the stocks within the industry as a whole, because if there's one that's creating some kind of product and launching it, the other companies might catch up. Super high beta company, you don't want to have too many of these stocks in your portfolio, because I mean, if you're only holding high risk companies, those are the most prone to market downturns. So if there is a market pullback, you're going to see a much heavier pullback in your portfolio, because these are called high beta stocks. Low beta stocks are your like Coca-Colas of the world and your Pepsis of the world. But these are going to be high beta stocks. But the beauty of holding these is that when the market does rally, when there is a lot of confidence, you're going to see these stocks moving higher. So quantum stocks are part of that realm. RGTI, QBTS, Ionic, and I'm probably missing QUBT, I believe. Yeah, there we go. QUBT, another big mover. So we're going to have quantum on our watch going into the rest of the day, potentially to add a stock from this list, as long as they close strong. Remember, you guys, it's still super early in the day. We still have about 5 hours of trading. So and it's only Monday. I'm always super skeptical of early moving stocks on Monday mornings, because traders are coming back from the weekend. They're super excited. They see a big move on a Monday. They get trapped in it, and this market sells off for the rest of the week. I'm not saying that that's what's going to happen here, but throughout history, that's the pattern. And it actually goes to the flip side too. If the market opens super low on Monday or sells off early Monday morning, that could be a liquidity grab before a big bullish reversal. Amazon, we're holding an Amazon call, and it's kind of flat, to be quite honest. It's kind of disappointing. I'm not a fan of what's happening with Amazon right now. Let's see, did it actually hit? So we're actually forced to close out of Amazon. I just ended up taking closing on the stock. Amazon. Man, ASTS is going off today. What a beauty. Looks like SPY just broke out. Wow, look at that. Beautiful. We're seeing that high of day test right now. See that? That's a resistance that we created right at the open. Looks like we're trying to break out. If we do break out, it could be the start of that Christmas rally that everybody's anticipating, which would take us to our 686 resistance. This dates back to December 15th. Above that, we have a pretty clear shot towards that record high. Let's see. It could happen. We're holding plenty of positions to ride this this rally. This would really lift all our positions. So we already broke out of this resistance. This is no longer resistance. We're in the bullish range. We're gonna see. This is the breakout. We have a resistance around 686. So we have a pretty clear shot above 686 on SPY. I think we hold. We're holding calls, by the way. We're holding SPY June calls for those of you in the group. You guys could see the strike and the details of that position in the Hyper Alerts channel. But we are bullish on the market, hence why we took those June calls. MU is just a monster. You guys have you guys seen this since earnings? Just a monster. What a move. Huge memory company right now. AI driven. Seriously. You know, another company just like it is SanDisk. Look at that rally. And since September, this thing it went from $50 to 284. Who would have known? I used to use their flash drives, these guys, in high school. Right, yeah. I agree. Rocket Lab, big mover today. Astera Labs. Okta is a good mover today. Looks like it's up. This is setting up nicely right now. We're not in Okta, but we are in the exchange traded fund for cybersecurity. So if you missed that, make sure you guys check it out. It's in our Hyper Alerts channel. It looks like Hut just broke 51, so it just hit our first price target. For those of you in our group, Hut's price target was back here at 51. We already took some profits. We're gonna continue holding this position because we didn't start with that many shares in the first place. So let me go back to Wi-Fi because I had that stock on our watch list earlier. I want to set some. Solid rally so far. Volume slowing down a little bit on the market. We're getting a little bit of an upside move, but volume is definitely slowing down, especially as we head closer to lunch hour on Wall Street. Movement is not as exciting as it was as this morning. What a beautiful move. We got into this morning, you guys. This is right off our watch list. This was off of our public watch list too. For those of you who are not even in the group, we post some of our stocks, just a couple of them, for free on our website, and everything else is locked. But you guys could see that we had Intuitive Surgical on here. We actually took this trade earlier in our group chat, and it has been really good to us so far this morning. It's been rallying. Really bullish on this stock. Again, it's a robotics company in the medical world. Already a prominent player, already making billions of dollars. You know, it's not one of those high risk robotics companies. Those of you watching, if you guys have any questions, if you guys want me to cover any stocks, let me know. I'll be on for a little longer. And then I'll go on to manage everything else in the group chat for those of you in the chat. But while you have me, if you want me to go over any charts or give you any levels, I can do that now. I'm just doing a little research, making sure that, you know, our existing positions are still up to par, and just doing some reviews. Google. You know, Google is one of the stocks that you should keep this in mind. If a stock market starts to sell off, but the stocks that were strong remain strong. So during this time, we saw obviously companies sell off dramatically over the last few weeks because, of course, the AI boom started to correct. So Broadcom and Oracle and whatnot started selling off, but Google has been just so strong since throughout this entire time. So the market has been moving sideways since October. Google has been nothing but net. And now that the market is bouncing back, Google is likely going to continue moving its higher, especially the fact that it's defended 300, it's regaining its momentum. What you should be watching for next is if Google can regain the 10 and the 20-day moving averages. The blue and the purple line here, they represent a really strong support. It's been carrying Google since its breakout 3 months ago. And so as long as it maintains those points, then it's in good hands to possibly retest that 328 and continue going, especially if the whole market continues to bounce back as it appears to be doing so. Google is buying a data center. That's the latest news. Let me see how much they're buying it for. Let me see if I can find $4.75 billion. And so luckily for Google, that is pocket change. Google's free cash flow sits at 74 billion bucks. So them spending $5 billion on a data center, that's really pocket change. Google is an excellent company. It's literally, I could see why Warren Buffett bought this, because they are just, I mean, how old is Google? Google is older than, I think, well, this is not right. Google is older than probably me, and they're still growing revenue at 16% per quarter to nearly $350 billion. They just had their first ever $100 billion plus quarter, and out of that $100 billion, $35 billion, guys, was pure net income. So that tells you they have a 35% net margin. That's insane for a company like Google. Statements, balance sheet, $386 billion in positive assets, $74 billion in free cash flow, $3.7 trillion company. If I was looking at Nvidia and Google and I see that Nvidia is a $4 trillion company and Google's not, I would be like, Google's definitely a buy. Is the price inflated by, market measures of a price to earnings ratio? Perhaps, but the Google is a fantastic stock. I think the stock is going to continue its rally, especially in a healthy market. It's already regaining the 10-day moving average today. If it breaks above that 20-day moving average, it's an easy shot to continue rallying. Why not talk about Warren Buffett? What did he do to you? Oh man, how did he ruin your calls? Isn't Apple moving right now? Yeah, Apple's doing just fine. All right, MP. Let's take a look. MP. So we already know that USAR is moving rare earth metals. So MP might also gain a little bit of traction knowing that it's in the same industry. We have a support right around 50.30. This comes from risk reversal back in November. Resistance, this looks like to be the strongest volume resistance here, right around the highs of 57.85. We're going to say that the resistance is around 58.15 just because this is where it kind of tracked. 58.15, and then support is going to be 50.30. And then we have another resistance right around 65. So MP is a big player in the mining world, especially for rare earths. Rare earth obviously is a huge industry. It was a big play in 2025. It's probably going to remain a big play in 2026 as far as negotiations go between the US and China. And then the US, in an attempt to rely less on China's rare earth exports, which the whole world honestly relies on rare earths from China. But in order to lower that reliance, they're working with local companies. For example, we've seen the US government take a position in this company, TMQ, Trilogy Metals. They took a 10% position. It's a Canadian company in order to boost rare earth investment here locally in North America. MP is one of the companies that has gained the attention of the United States as well. Company has been kind of slow. Rare earth companies had a really big run and then they flattened out fully. A lot of the reason is because a lot of these companies are still in development stage, and to develop a successful mine for rare earths is a very enormous task. It's very expensive, the infrastructure is costly, and it's going to take years before they actually start seeing revenue, if they ever do finish the projects, because in a few years Trump might be gone, the next president may not support rare earths in North America as much. It's really a political play, it's a catalyst play. It's not yet a financial steady play, but it may move when attention is called back to rare earths. MP right now it looks like it's moving a little sideways. There's not a lot of momentum compared to the rest of the market. Perhaps if it breaks above 55 to 56, it may run to that 58 mark, but quite honestly, a little slow. Let me look at it on Thinkorswim because that'll give me a little bit of a better idea. Yeah, so the reason why it could be slow is because it's trading just below that 10-day moving average. So it's seeing that resistance pushing it back on that daily candle, which explains why we're seeing those wicks at the top of the day, at the top of the last few days. So some work to do. It needs to get above that 10, and it needs to get above this resistance of around 55.60 before it can potentially see 58. I hope that helps to your MP question. Let's see, Nike. Oh my goodness. You know, that's what happens, you guys. Look at this. If you look at Nike versus On, you'll clearly see who's taking their market share, and it's worrying for investors. You know, you have Nike not growing revenue, and it's flatlining on revenue. This is one of the biggest companies in the athletic world, and they missed a lot of trends, and so their breakdowns are I think I'm losing network here. Yeah, it seems like my videos. It's weird. My trading platform is still updating in real time, but it seems like the rest of my system is. Come on. Is it still frozen on your end? Got it. Okay. Maybe it'll catch up. Let's give it a second. Are we frozen, you guys? Can you guys see my screen moving, or are we still frozen? Oh man. Okay. Well, since I'm frozen, I'm gonna have to maybe stop the stream and go back in. Let me stop the stream, and then I don't know if it's gonna be the same. I don't know if it's gonna be the same.